Welcome to Pro Webcast News, where we bring you daily industry updates. Today is Thursday, December 3rd, and you're watching the Afternoon Update with Paul Wilson. Today's news is sponsored by Sunderland Group, your success, our tradition. For more information, please visit www.sunderlandgroup.com. Now for today's headlines. Federal Reserve Chairman Ben Bernanke this week presented a defense of the U.S. central bank's efforts to battle the recent financial crisis, actions that he says staved off further problems. According to Bernanke, quote, "As serious as the effects of the crisis have been, the outcome could have been markedly worse without the strong actions," unquote. Bernanke made his defense while speaking before the Senate Banking Committee, as he continues to make a case for a second term. In his time as head of the bank, the Fed has kept interest rates near zero and added more than $1 trillion into the financial system as part of an effort to battle the worst financial environment since the Great Depression. In related news, Bank of America has announced that it will repay $45 billion of taxpayer bailout money received through the Troubled Asset Relief Program, or TARP. The move could free the bank from pay curbs as it continues to search for a new CEO to replace Kenneth Lewis, who is expected to step down at the end of the year. The move is expected to help the U.S. Treasury, which has been receiving growing criticism due to the hundreds of millions of dollars handed out to corporations during the recent crisis. Meanwhile, Greg Curl, Chief Risk Officer for Bank of America, played a large part in gaining permission to repay the government and is considered by many as a favorite to replace Lewis. In investment news, U.S. mortgage rates have dropped to a record low, far below a previous record set earlier in 2009, according to a recent survey by Freddie Mac. Rates on U.S. 30-year fixed-rate mortgages fell for a fifth consecutive week to an average of 4.71% for the week ended December 3rd, down from 4.78% the week before. The low mortgage rates have combined with high affordability to help the housing market make considerable steps toward recovery this year after a 3-year slump. I'm Paul Wilson, and thanks for watching Pro Webcast News. For more in-depth news and features, visit producersweb.com.